Hello everybody, welcome to the Technical Analysis webinar. My name is Troy. I'll be presenting for AvaTrade today. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Thank you. Looks like we're up and running fine. If anyone has any issues as we go along, please let me know. And Catherine, welcome. Yes, we'll go over how to set up different buy and sell positions. You said buy and sell options. If you're talking about options trading, we're not doing the options trading. It's a separate platform, separate methods than the style of CFD trading we're doing in this webinar. But if you meant just go over different options of how to buy and sell with this style of trading, for sure we'll be going over some examples of how to do that, along with how to do maybe some risk management stuff along with it. So that leads us right into the next slide here. There is risk with each and every trade that you take, risk of losing funds. Obviously, there's also the potential to make profits with each and every trade that you take, which is why we're all here, to go after as much of those potential profits as possible. You have to understand the flip side, though, the side of risk, that you should manage the risk in a way that makes sense for you. And we'll go over some ideas on how to manage risk in terms of utilizing tools that are available to you in our web trader platform and the AvaTrade Go mobile app. Keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Real quick, before we get on the live charts and go over some opportunities that you could be interested in trading on, what is technical analysis? For those of you who are new, basically it's looking at the historical movements on the price charts. Usually candlestick charts are the type of charts traders are looking at. And when you look back at the price movements, the visualization of those movements within the candles can create patterns that maybe look predictable to you. Price levels that maybe look important to you, where you see levels of resistance or support, where the price maybe has trouble going below or above a certain price level and tends to reverse off of those price levels. All kinds of those types of patterns that you can find in the candles that then can help maybe dictate your trading strategy as you move forward in time. And so we'll go over some of those ideas and methods, mostly from a manual perspective, meaning we'll draw our own lines. We'll look for our own price levels and patterns. You obviously can also make use of indicators that do some of that work for you. But I think it's important you understand the manual methods within the webinars, and then you can use indicators that maybe you trust as well to help you with your technical analysis, and the indicators look back at the same candles that you do when the indicator is telling you maybe that something's overbought and the price should come down or oversold, etc. If you have any questions or input that you want to give as we go along, please do so. Anything that's pertinent to the conversation, I'm happy to address or share. So real quick, before we get into our web trader, which you access here from this login, or the AvaTrade Go mobile app, which I'll share with you in a moment, you can download from our website right here, trading platforms, AvaTrade Go. And by the way, we do have an options trading platform, Ava Options. It's a completely different style of trading, but you're more than welcome to check that out as well. You can add an options account from your client area at any time. Now, what are the headlines today with the fundamentals? I know we're doing technical analysis today, but it's usually a good idea to understand which way is the wind blowing, what's going on with the fundamentals before I get into doing my technical analysis, because I might have a preference, or you might have a preference of what direction you prefer to trade on certain instruments, and then you look at the technical analysis and see if you indeed have an opportunistic entry point to trade in the direction you would prefer to trade. So if we look at the fundamentals, we see stock, the headlines we're looking at here, stock recovery takes a breather ahead of U.S. inflation numbers. So the stock recovery, meaning stocks have been rising. There's been some optimism after all the fear about hyperinflation and everything. And stocks have been climbing the past days, and the indices. and oil for that matter, based on large economic demand with strong economies going on around the world. So there's been a fear reduction in the past days in terms of all the fear about interest rates maybe going up because of high inflation, etc. And then we take a look, well, what's coming today? That's what the headline was alluding to out of the US. This is really the focus today. These CPI numbers, the Consumer Pricing Index, gives a good idea of how much inflation is there still in the economy. If these numbers come in higher than expected, that's a sign of more inflation than expected, okay? So if the numbers come in lower than expected or as expected, maybe that continues with the theme here where fear has kind of disappeared a bit these past days. But easily the markets could have a huge onslaught of fear. If these numbers show continued hyperinflation, then there's fear that, hey, economies can be hurt if prices are rising too fast and people can't afford to keep buying things. Also, the higher the inflation numbers, the more investors fear that increased interest rates will come sooner rather than later. Because the way that central banks around the world try to slow down the ultra high inflation is by taking away the stimulus measures that fed into the inflation. So the reason the economies are roaring and doing so well and driving up prices so quick is because of the ultra low interest rates, the stimulus packages, the bond buying programs that were implemented through the COVID pandemic to prop up the economies. Well, not only did it prop up the economies, it made the economies roar. And so much so that the inflation, from the high demand on everything, the inflation got a bit out of hand. And so central banks are promising to cut back on stimulus measures, to raise interest rates. And so if we see large inflationary numbers out of these CPI numbers again today, then the fear will set in that, yeah, interest rates are going to go up sooner rather than later. Stimulus measures are going to be cut back, etc. And so that's what the wait and see is today when this headline says stocks recovery takes a breather ahead of U.S. inflation numbers. These are the U.S. inflation numbers that they're talking about, these CPI numbers that are coming. And you have some other announcements, too, that will be looked at, initial jobless claims, et cetera. But the focus is really, I think, on those inflationary numbers, the CPI numbers that are coming later today. So it's kind of a wait and see mode. And that's really globally what the driving theme is, other than some other headlines that could hit at any time, right? Will Russia invade Ukraine? Will there be a deal and Russia will pull troops back? Those types of headlines could hit at any time and change the level of fear for the good or for the bad at any time. So you have to prepare for unexpected potential news like that with your risk management plan. Where's your stop loss put if you're using a stop loss? Do you have hedge positions waiting as pending orders to cover yourself in the opposite direction? Are you using AvaProtect, etc., as ways to prepare for potential unexpected news that could swing the market the wrong way for you? But as we see things now, it's kind of a wait and see mode until those CPI numbers come out as to whether there's going to be maybe some sell-off on the market on different instruments or a surge further up on some instruments. So that's the situation we find ourselves fundamentally. So now we can go into our technical analysis, understanding that, hey, if the charts are ranging right now, ranging meaning going up and back down, kind of not breaking in one direction, now you understand why they would be ranging. The news is being weighted on. Once those CPI numbers come in, some of the ranging patterns you see on the charts could break into a breakout pattern, either up or down, breaking whatever resistance is right above or whatever support is right below, depending on how the news comes in. With those CPI numbers, you could see the market all of a sudden break in one direction or the other. So what could make sense today are some pending orders waiting just below a near support level in case the news causes momentum to break the support and go down. Then you'd have sell positions maybe waiting, pending orders waiting to sell just below the support, waiting for the momentum to show itself. Or you'd also have pending orders above the nearest resistance, waiting for the momentum to break through the resistance to confirm that, there's an uptrend after the CPI numbers come through. So we'll take a look at some charts with that in mind, that this is the fundamental news situation, and then we'll take it from there. If we want to take a look at the mobile app, we can do that. Let me share a full screen view. And so very simple for technical analysis in the app and on our web trader. You don't have to spend the time looking for all the price levels yourself. You can if you'd like, and we'll do some of that for practice. But you can see that Trading Central has some professional analysts that have done a lot of that work for you. So we can go by tapping on this tab in the lower right and going to either analyst views or featured ideas, and we can pull up free signals that have outlined the technical price levels for you. So we start looking through and we see USD ZAR intraday dropping, USD Turkish lira rising. Okay, we start looking, and what you want to do with the signals is find something that you're interested in trading on. And the signals are mostly currency pairings and cryptocurrency pairings. Okay, so we see a signal that says NZD USD up, maybe. Okay, fear is not high today, so the USD maybe is not strengthening or weakening rapidly, but we've got some inclination that maybe the USD would give up ground to the New Zealand with this signal. Or we look at New Zealand JPY and we see that it's expected to rise against the yen as well. And maybe you think, okay, so New Zealand USD, let's take a look at that. I'll tap on that one. And you think, okay, what would happen later today? Let's say the New Zealand dollar has been rising based on this signal. The preferred direction says up, and maybe before the CPI numbers come in, it's moving that direction. But you also could think, hey, maybe if it's already reached the take profit levels, I haven't looked at the chart, we'll take a look. It gives you the price that, as long as it doesn't drop below this blue line, the preference is upside prevails. As long as it didn't drop below this price that it shows here, that's the blue line, they say it's a buy signal. If it did drop below that price, then they're saying the buy signal, the preferred direction's no good, because it's established a downtrend at that point. If it drops below this price, they're saying the alternate scenario is to sell if it's below this blue line. So the signal could have been here for several hours, but you can still use it. You take a look at the chart and you see, okay, where is this movement? Is it still above this blue line? If so, did it near the take profit prices yet? If it's still hanging out down here, then they're saying buy. If it's already up here, then you missed the move. It's already near the take profit lines. But then you could be looking, maybe it's at the resistance level now, and maybe that's a spot you might think about selling from, considering the fact the inflation data is coming out of the US later today, and the fear about that data could re-strengthen the US dollar, which we've seen. The fear has been strengthening the US dollar because it's fear that interest rates could go up in the US multiple times soon, which as interest rates go up, a currency tends to strengthen. So the fear is about what will the US do about hyperinflation. And if those CPI numbers come in later today showing indeed more hyperinflation, then the USD could strengthen in response to that. That's the fundamental connect the dots there with that CPI announcement and what would happen with the USD. So currently, the fear has been low. And so it makes sense the New Zealand dollar could be rising against the USD. And so maybe this signal has been doing well. If it already reached the take profits, you can then look at the reverse idea of that signal, understanding that these take profits are likely a resistance level. If we look at, instead of 30-minute candles that this chart is looking at, if we look at one-day candles, 4-hour candles, we'll probably see a reason why they say take profit here. There's likely a resistance level in the past that then it might have trouble breaking until that news comes out later today. So let's take a look at this NZD USD as an example, but let's look at it on the full screen web trading. Okay. So let me exit the app. I'll leave that screen share. Type OK if you're with me so far with what we've looked at, with how to use the signals, etc., how to read those signals, the preferred direction, the secondary direction that they give you in case things go bad. It's all outlined there for you. So basically those signals set you up with the potential to do a market move and then to back that up with a pending order if it goes below that blue line that we were looking at in the example we looked at, to have a pending order ready to trigger in the opposite direction if it shows you that the trend reversed below that price level. Okay, so if I log in here, I'll be on the web trader, and I've already logged in here. So I'm on the web trader, which has the same functionality basically as the app, the same risk management tools, the same signals coming in. If I go here, I can look and see Trading Central. There's the market buzz and analyst views, the advanced features that we're looking at for the Forex signals. Okay, this is a position. Maybe I'll close it. It's from the last webinar. Hey, it looks like it's turning out nice. Let me close that off just to get it out of the way. Normally, if this wasn't a demo account and this was a live account, I probably would let that run. Might even move my stop loss up to entry or something. But I want to get it out of the way just so it's not a distraction as we go over new ideas. Okay, so if we then put NZD USD was that signal. So let's look at it. NZD USD. I'll expand the chart, otherwise known as the Kiwi dollar. Okay, so we're looking at 1 minute candles. I don't want to look at 1 minute. Let's look at 1 hour. And you see the signal was right. That signal, I scrolled down a bit in the signals for a reason, and the signal had come in a few hours ago. And look what's happened over the last several hours. NZD up on the USD. So that not every signal is going to be right, obviously. But you can see how it fit the fundamental narrative that there wasn't a lot of fear. The USD decision making is kind of going sideways because of those CPI numbers coming out later today. So fundamentally, it made sense why the New Zealand dollar might be able to climb on the USD in the short term. And we see that that's been happening. Now, let's go to larger candles and see if we can find a resistance level over here at those take profit prices that were recommended in that signal. And indeed now, and this is the value of what we call looking inside out. I started on the smaller candles, and sure, I see the trend as an uptrend, and I didn't see any resistance. Now I'm going to take a larger view, back away from the mountains, right? So I don't just see the little trees, I can see the big peaks and the bigger picture. So as I back away, I'm putting larger candles to see the bigger horizon, the bigger view. And so now I'm on 4-hour candles instead of 30-minute, and now I see, here's the resistance. This was old support, became new resistance here. By the way, if you're new to technical analysis, that's kind of part of support and resistance theory. Something fundamentally happened that caused the New Zealand dollar to break below this support level against the USD. Something on this day, likely there was some announcement, some event that occurred, and boom, the support level broke. And you see, because that news exists then at that point in time, the same news that caused it to break below that support level now causes that support level to be resistance. 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 So you see the fundamental changes in the global environment, in the economies, within the patterns on the chart. So support, 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 something happened in the news, boom, it breaks the support. Now that becomes resistance, 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 and down it goes. Okay? Now we see we're back up near that resistance. So it makes sense that the uptrend was expected to slow, and those take profit levels were there within that signal. The folks giving those signals gave those take profit levels because they looked at the bigger picture. And they said, wow, we've got resistance up here, right about there, okay? And above that, remember they gave 2 levels for take profits. There's another resistance / support right up here, where it used to be support, support, broke below, became resistance. Then another step down, resistance. So we've got resistance here, and then a new resistance up here if it breaks through this level. Okay, that's what we see on the 4-hour candles. Now we can come back to the smaller candles. Whoops, I didn't want to do that. Let me get rid of that line. And what I wanted to do is change the candles, not draw another line. And let's go to 1 hour candles again. Now I take a look and I say, there's this first resistance level on the 1 hour candles. Resistance, resistance, resistance. We know on the 4 hour candles, we see another resistance up higher. Okay. Now you take a look at this as a trader and you say, okay, I could do a market move here and understand that maybe over the next couple days, with today's announcements, with out of the U.S. with the inflationary data, there's good reason why the USD could strengthen, depending on how those numbers come in. It also could be the opposite, right? If the inflationary numbers are lower than expected, and then the market thinks, maybe they won't raise interest rates so quickly, and the US dollar weakens further, you could see this blow through this resistance and the next one. So maybe you have your stop loss if you're selling on this now. You have your stop loss above the second resistance level. If it breaks through this one and the next one, then you assume, wow, that news must not have went my way. I'll get out with a small loss. And if it goes the right way, then you've got large potential profit down to a much lower support level, maybe down here. Okay, this was old resistance here. Once it broke above, it became kind of an area of support, resistance, support, breakthrough, resistance, kind of a gray area with this price level. And the latest was support right here. Support, 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 and up. So if there is a rapid strengthening of the US dollar after today's announcements, maybe a spot to take profit could be just before this support level down here. Obviously, you can pick your spot. You could take it sooner, just before this little support level. Depends on whether you're scalping or going after larger moves. Okay. Now, one way would be, as I suggested, you could put a stop loss above this resistance or above the other resistance. Another way would be take advantage of the unique AvaProtect feature for your risk management, and you could protect by time instead of distance. Meaning, I could say, you know what, my take profit, I want to be patient and go after this movement down towards this support level. So maybe I say my take profit will be 0.663 or 0.6635. So I come here and I say 0.6635, just above this support level I drew. So right about here would be my take profit. Whoops, let me retype that. 6635. Okay, if you click up here, it closes it. So I click down here and it won't close my take profit program. Okay, so then I say, if I want to use AvaProtect, I can say, if I protect it for 6 hours, that'll get me past today's announcement. It would only cost me $19. And you pay that up front as a premium cost. And then if it goes flying the wrong way, you don't lose anything more during those 6 hours. And you can close off the trade as the expiration of the protection ends, and any negative floating will be added back to your account. Or if you let it run, any negative floating is added back to your account, the trade can keep running. But then you better add a stop loss or manage your risk maybe in a different way as well if you want to manage risk. Another option is to say, you know what, I'll be even more patient. I'm going to go 12 hours ahead, 1 day ahead. Let me even go through today and the next business day and have it expire on the 14th. That's 4 days from now. That gets me through the weekend. The USD could strengthen for lots of reasons by the time the weekend's over, and I get to this time frame, this expiration on Monday, the 14th. So maybe I like that idea, and I'm only risking 25 compared to a possible profit of 68.50. Okay, so you have options with your risk management. And so let me just leave this as New Zealand USD possible. I want to go sell. Somehow it got on buy. My take profit down here at 66.35. And obviously you can go a different direction. This is a simulation. It makes sense with what I see fundamentally and with the technical analysis, right? So this is why this is what I'm simulating. AvaProtect. Let's go 2 days protection to get us through the weekend to the 14th. That's 2 business days, right? That's why it goes all the way to the 14th, because of the Saturday, Sunday doesn't count as days in this protection. So 2 days protection gets us to 1700 on the 14th. And let's say I'm willing to risk or spend, in this case, if I'm paying a premium, 1% of my balance. And you could risk whatever percent makes sense to you, or spend on the premium whatever makes sense to you. So let's say that my balance is 50,000, let's pretend, and I'm willing to risk 1% or spend 1% on the premium. So let's say 500 is my number. So I go ahead and I put 2 lots. And I say, wow, the premium with 2 lot position is just under 500. So maybe I say, it's okay. I'm willing to spend that for the potential to make 1,348, almost triple what the premium costs, and I get to wait 2 full days to see if the USD will come down to my take profit. Okay? And for that matter, if I'm really being patient, I could have a different take profit. I could put my take profit at this support level down here, where it was a more major support, and then a breakthrough that became resistance, and then a breakthrough back up that became support, support here, okay? So I could even get a better ratio if I want. If I'm going all the way to Monday, maybe I think that this could come down to 66 even, 0.66, which would be just above this line I drew here. And then now I'm better than 4-to-1 ratio potential profit to what I'm spending. I can always manually close it early if I like the profit that's showing, if it goes the right way. And as long as it's above what I paid for the premium, if it's 1,000 in profit, I might choose to manually close it. That's okay too. So in this case, I'm all set up. I've got my risk management set out. I'm only going to risk up through the expiration of this trade on Monday, the premium. I have no other risk other than small overnight interest cost, which isn't going to cost you much for a few days. And so I sell. You'll see immediately the cost of the premium came out of my balance. That's gone, right? But now I'm risk-free up until Monday at 1,700 when that protection ends. And so now, even if this breaks through before the CPI data comes or right after it, maybe there's a false move, it breaks through and would have hit your stop loss before going the right way, doesn't matter now. This can go as far the wrong way as it wants today and tomorrow, and then it could come swinging back and be in profit by Monday before your protection ends, and you never had to risk anything more than the premium to be patient and be able to wait all the way to the 14th on this trade. Okay, so if you believe the fundamentals are on your side, that this resistance level or the upper resistance will eventually hold in the coming days, then this type of setup makes sense with AvaProtect added on. Any questions on that? Fato, you asked, how does AvaProtect work? Let me know if you're okay with it now. I kind of explained it with the example we just did, or ask a more specific question if you're still confused about it. AvaProtect is available on all currency pairings, or pretty much all of them, and gold and silver. In the future, I expect it will be available on some of the major indices. Okay, I don't see any questions popping up. Just to make sure that everyone's still connected with me properly, just type OK, that you're all right to move on to another instrument here. All right, great. I've got enough responses. Looks like I must be doing a good job of explaining, because we haven't lost anybody signing out, so you must not be bored. And I don't see anyone asking too many questions, so everything must be clear. So that's good. All right, so maybe we'll look at something else that could be related to everything that's going on right now. What do you think could happen to something like crude oil if the CPI data is really high and there's fear that interest rates are going to go up, which would strengthen the USD typically, increased interest rates? What do you think could happen to crude oil if there's fear that the US dollar could rapidly strengthen? If there's fear that hyperinflation is going to cause increases in interest rates in the US? Yeah, most commodities could be pulled down, Catherine. No guarantee, right? But if the US dollar rapidly strengthens because of fears that interest rates are going to go up quickly in the US, if that happens in response to, let's say, high CPI data, then a strengthening US dollar could cause commodities to come down, right? If gold is paired against the USD, gold is usually an inflationary safe haven. Gold rises when you expect inflation to go up. But in this case, if the CPI data shows hyperinflation, then the fear is the US will raise interest rates to strengthen the USD and pull inflation down. So you could see a rush out of gold and into the USD if there's high inflation data, which seems backwards, but that's what could happen, right? So you have to think about these psychological games that investors are doing, saying, yeah, usually gold goes up with inflation fears, but when the inflation gets so high that there's fears that governments are going to take measures to lower inflation, then maybe high inflation numbers actually cause gold to go down. If you understand what I'm saying here. So you have to decide on that, what you think fundamentally people are thinking. But that's why sometimes you see the opposite move than what you expect from data. You could see high inflationary data and say, okay, gold should go up. It's an inflationary safe haven. But you could see the dollar strengthen and gold drop, and you say, well, what the heck just happened? And you have to take the next step in your mind to say, it's because the inflation's so high that maybe the expectation is interest rates will go up to lower the inflation. And so people are selling gold before that happens, as an example. Not saying that's going to happen, but just an educational example that many times that's why you see the opposite move than what you expect. It's like chess. People are thinking 2 steps ahead. So let's take a look at commodities. That's what I see folks asking about, whether it's oil or gold or silver. So let's take a look at crude, oil. And Brent crude and US crude tend to move very similarly, so we don't need to look at both. The price point is different, but usually the charts look almost exactly the same. So we see crude oil pushing up right now after a pullback. You say, okay, why did crude oil go so high recently? And you say, okay, it's because of the hyperinflation. Very weak currencies because of all the low interest rates, and because the economy's opened up, there's been a huge demand for oil coming out of the COVID pandemic. And so with countries like the US cutting back on oil production for maybe political and environmental reasons, the ability to increase supply has diminished, with the US really is the number one I think of as cutting back on their energy production in terms of crude oil capabilities. And at the same time, demand was rising really fast. So crude oil prices went up, and the weak currencies allowed the crude oil to rise even faster as well because of all the low interest rates weakening the strength of the currencies. So you had huge inflation on gasoline prices and crude oil value. So the pullback then that you see after the highs, this big pullback from the low 90s all the way down to the mid 80s, well, that's maybe in response to fear of increased interest rates coming, which then strengthened the US dollar specifically, and down comes crude oil against the USD. Now we see a recovery back up. But this recovery back up, if you look, there's some resistance levels up here. There's one here. We see resistance, and that was a breakthrough. Then it became support, 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 and a breakthrough, and then resistance. You see the candles. So this is a resistance level, and it hit that just now. Came up, hit about 91, and it pulled back. With today's announcements on the CPI data coming out of the US, if that data shows hyperinflation, there's going to be fears of increased interest rates coming. You could see the US dollar strengthen again and cause this drop to reoccur from this resistance level. I say you could see that. I'm not saying you will see that. But if I believe that could happen, I could just do a market move now, because I see it pushing off that resistance level right now as I'm speaking, right? So I could say, all right, take profit down here at the next support level that I drew. This is an old resistance. So here's a support level down around 89.78. So let's say 90 even. Take profit at 90. Stop loss above the resistance, just above 91. So I could say 91.1. Okay, to make 30, I'm risking 25 from the current price. It's dropping though. Too bad we didn't look at this, say, 10 minutes ago. It was right almost exactly on the resistance. And then I can say, okay, if I want to risk 500 or whatever it is you're wanting to risk, right? I start putting the lot size. I see this lot size would risk 367. Let me go and put 1 1/4 lot. Gives me 600 risk. 1.1 gives me 550. 1 lot even gives me about 500. Possible loss, 500, almost exactly. Possible profit, 640. Okay, so if I like that setup, then I sell. That's it. So that's a market move based on technical analysis. There's a resistance level here. Resistance, which was an old support level, which broke and became resistance, and now it's at near the same spot, hesitating. I suspect this will continue to test this resistance level and could break it before the CPI data comes, which means then you would need to re-enter if you already hit your stop loss, but you want to short it, okay? Take profit is down here. Now you could do a pending order as well. If you want a pending order up at this one, in case the first one goes bad, you could put a pending order up here at this resistance level to sell from up here in case it breaks through and goes to here before the CPI data comes, right? And have your stop loss above that one on the pending order. And then your take profit could be back down somewhere down here, okay? I think you understand how to do the pending order, so you could do that yourself without us simulating it. But you know, we've got the technicals lined up here. We've got an opportunistic entry point with crude oil pushing up just before some big data coming where there's fear that could actually re-strengthen the US dollar and pull crude oil down. So the announcement schedule could be on your side here to maintain this resistance level here, okay? If we look at our positions, we opened, the NZD already moved into profit, so we already overcame the spread, and crude oil is trying to push into profit, but both of those are very early on, obviously, okay? Yeah, Henry, it looks like the big fear, the big sell-off on the cryptocurrencies has at least come to a pause. There are some great price points that were hit if you're into buying on those low prices on the cryptocurrencies, and they've been bouncing nicely of late. The latest news I heard out of Russia, after first they were threatening a couple weeks back that they would ban cryptocurrencies completely in their country. The latest is maybe the banking system in Russia's talking about now making them legitimate and regulating them to be completely legal for everybody. And that creates positive sentiment maybe then. So the news can swing just like that fundamentally on cryptocurrencies, just like it can on anything else. And when you're doing the technical analysis like we've done on these other instruments, if you see price points you like, can follow the same type of strategies we're using here with the standard instruments. All right, everybody, I think this is a good spot to stop. We've simulated AvaProtect. We've simulated market moves. We've simulated a pending order ideas without actually placing pending orders. You could go about and do those if you're looking at some of those other price points that maybe could be reached. What you could do is just come back a little later today, but before that CPI data comes out in the US, and look at where the prices are, then get your entry points and make your moves with the same type of strategy that we just did now, okay? It's a little early, maybe, some of the trades I'm simulating here to get in based on the CPI data coming, because there's time for the movements to continue to move and wander before that data comes. But you get the idea with the strategy that we went through, hopefully. All right, everybody, I don't see any more questions popping up. Thank you all for attending. My next session is next Tuesday evening, 6 p.m. UK time. All right, everybody, bye for now. Good luck with your trading. Get your price points found that you like before that CPI data comes. I think we could see some large moves after that on the charts. Good luck. Bye for now.